Hey guys, welcome back on the channel. In today's video we will explore ORCA, which is a top 3 DEX on Solana. In the Solana ecosystem they were actually the first biggest main liquidity layer on chain. Then recently they've been surpassed by others like for example Meteora. This is the top 10 ranking protocols on Solana and we see that ORCA is the 10th. The TVL is not as high as it was in the past. So you can see here they had before in 2021 a TVL of over $1 billion. It doesn't mean that right now they're not profitable. It's definitely a top 3 DEX on Solana and you can earn a lot by providing liquidity in here because there's still a lot of action, a lot of volume going through these pools. And in this video I'm going to show you how to read the whole dashboard and how to choose profitable liquidity pools that you can deposit your crypto in and generate some passive income. By the end of it, you'll understand how to use ORCA for doing that, so let's dive in. Now going back here on DeFi Llama, we see that ORCA has a TVL of $266 million and the volume is pretty much $690 million. So when it comes to volume to TVL ratio, so this is a really sweet spot. That means that there are a lot of opportunities to make passive income on ORCA. Now there's going to be riskier pools and less riskier pools. If you go with something like this one, for example, euros and USDC, we're talking about stablecoins. They can depeg, but it's unlikely. Although I've seen crazier things happening in crypto, and actually I've seen USDC also depeg. But just because they're stablecoins, it's going to be an event which is unlikely. So if you want to go with something more conservative, you can go with this type of pool, stablecoins. You can go with pools that have Solana and a liquid staking derivative, for example. Those are also going to be good options for more conservative users. The difference is that you have to be bullish on Solana in order to be in such a pool. And if you're not someone who is comfortable with the volatility of the crypto markets, probably you want to go into these stablecoin pools because these will give you returns that traditional finance doesn't even get close to. And especially this one because it's being incentivized in the ORCA token and also euros. And that's also a very important point. If you're looking for a specific pool and you're eyeing a couple ones that have the same token pair and you're trying to decide between each of them, well, the volume will be the kicker, of course, but if you're looking at one having rewards and the other doesn't have rewards and they're just the same token pair, go with the one that is being incentivized because on top of the liquidity pool fees that you'll get, you'll also be paid in the rewards, the incentives that are being directed to that liquidity pair, okay? This is essentially a bonus on top of the fees, so do not overlook pools that are being incentivized and of course if there's something you want to deposit on. Now comparing pools, there's hundreds of pools here. If you don't have a specific one in mind and you're trying to find the best performing pool, you gotta go here with volume, for example. Volume will tell you the most traded pools. So we have these Euro USDC, BSOL paired with SOL. For the past 24 hours, these have been generating the most volume. It doesn't mean that they are the most profitable ones because that's where the yield per TVL ratio comes to. If you look at this yield, and now let me sort things out by it. So this is the pool that has generated the most yield per TVL for the past 24 hours. Essentially, liquidity providers on this pool earned 2%, 2.6% on their investment for the last 24 hours. That's important to state because things can and will change in crypto. So I wouldn't get too much caught up with this yield per TVL because sometimes it will, many times I would say, not sometimes, many times it will show something with even 10% or 15%, but they will be meme coin liquidity pools. You will earn those rewards, but it's going to be in a short-term basis. They will just pump for a day, a couple of days, and then they will slowly die out. And they're very risky because usually that happens with new meme coin liquidity pools where everyone is jumping into that meme coin bandwagon. Now, in order to earn as a liquidity provider on these pools, you need to be very active and you need to jump off the boat when you see that the market is toning down, the price is going down, and also the volume is constantly going down day by day. So if you want to go with something more stable, I mean, it's hard to argue that you're going to find Solana paired with the stablecoin to be the best liquidity pool. And that's what we can just see here. This has been the most traded for the past 24 hours. This is a pool for people who are bullish on Solana because after all, that's going to be your exposure here. The Solana token, USDC is a stable coin, and this pool is earning 0.5% a day. The volume is much higher than the TVL. We're talking about 390 millions in volume, when the TVL is a little short of $29 million. 0.5% a day. This is a yield that will, again, it will fluctuate, but it's a very decent yield. In this type of pool, you can expect to earn overall through the whole span of a year easily 50% of your deposit. And that's being conservative with wider ranges that do not demand too much management from your end. So you can come here, you can set up a full range, of course, that's going to be completely hands off, but you'll earn very low fees in that case. You can go with a custom range and then decide for yourself the percentage of your downside and also the percentage of your upside. The tighter your range will be, the best for earning fees and for getting a higher APR. But also, the more often you will go out of range, that's for sure. I would consider this to be the #1 liquidity pool you want to have exposure on ORCA or actually any other DEX on Solana if you are aiming to invest on Solana as a blockchain, because like I said, you are holding the volatile asset here in the shape of SOL. So for example, right now we see that SOL is trading at $134, and we see that for, let's switch up for 4-hour candles. So right now we're at this resistance here. Probably it will go back down maybe to this floor. So if I would open a position right now, I would do something like this. The downside would be at around 124, something like this. And the upside, I could leave it at that, or I can just widen it up a little bit more, just in the case that Solana can eventually pump to 138, 140, something like that. It would still be a very tight position because we're overall looking at the 13% range around the current price. But this is basically how you can set up your full range just by reading a chart. But SOL USDC is definitely the best pair, one that you want to have exposure on if you're providing liquidity on Solana. Now there's others. Wrap Bitcoin with Solana, also a great one, 0.22% yield for the past day. And we're talking about a couple of blue chip assets, Wrap Bitcoin and Solana. On the overall risk spectrum, I would also consider this to be low risk because Bitcoin price and Solana price, they move together. So even if you are not planning to have a position open for long periods of time, what's going to happen is that your impermanent loss might not be as high because of that, because the tokens do go hand in hand. Let me show you that here on the correlations matrix on DeFi Llama. So let's add Sol to this matrix, and we will see that Solana and Bitcoin pretty much for the past year, 0.71 score. The highest score is 1, the lowest is -1. For the past month, it's even better, it's 94, and for the past week, it's 68. So overall, if you're holding this pair, impermanent loss, it's not going to bother you all that much. And this is true for most of the blue chip assets pools. Even Solana paired with Ethereum would be a great option. And there's other pools that you can choose here with other Bitcoin derivatives. They also have CBBTC with Solana, and this one has a higher fee tier, even slightly higher yield for the past day as well. So this would also be a very interesting option. The difference between these derivatives is that CBBTC is issued by Coinbase, so pretty much you'll have to have trust that Coinbase does have the Bitcoin that they do claim to have. But anyways, Coinbase is a reputable centralized exchange. It's not my favorite, but overall this is also an interesting option if you want to have exposure to Bitcoin and Solana. Now let's sort this by yield per TVL for the past day. We see then these type of things like AEB, SOL, 2% fee tier pool, 178%. The TVL is $10. So this is degen stuff. You're essentially going into degen liquidity pools. I wouldn't touch this with more than a couple dollars, $20, $30, something like that. Very, very high risk stuff. Unless you are an advanced user, stay away from this. Stick with blue chip stuff, like I said, stablecoin pairs. You can definitely get these results getting 50% yield in a day with meme coin pairs, but I don't advise newcomers to liquidity pools to just go get involved with this type of plays. You need to do some heavy research, And even if the meme coin is reliable, you will always face market volatility. And this metric will essentially tell you that for the past 24 hours, this is how much liquidity providers have earned by farming on that pool. Then we have volume, which will essentially show you the more on-demand pools. Usually this will bring the most amount of fees, and fees in the shape of blue chip assets or very solid assets at least. They will also have very high TVLs, which is good. Pools with high TVLs can handle more trades, and the deeper the liquidity, the more volume they can handle. It's sort of a vicious cycle. So these are all definitely pools that you want to keep an eye out for. Then there's the kicker, which is rewards. It's like I said in the beginning, these are just bonuses on top of the fees that you have been earning. And if you're looking at a blue chip assets pool, a stablecoin pool, which is being incentivized, don't shy away from it because it's just free money essentially. And also, I really like Bitcoin pools because in the long run, you can stack sats. You might look at the yield and think, hey, I'm just earning 0.22. I want something more juicy. And then of course you can go get that here on Fartcoin paired with Solana. Fartcoin, it's a meme coin that has been around for a while. Will it last a couple of years more? I don't know. I know that Bitcoin has lasted for over 10 years and it's the leading cryptocurrency. So from an investment perspective, I think this is the more solid option. If you're starting out with smaller amounts, let's say $20, $30, $200, you might be able to still earn very nice yields here, higher than 0.22%. If you are going with a very tight range. The tighter it is, the higher your APR will be. So if you're starting with small amounts, you might want to go into a custom range and have something like 5%, 10% range overall. Actually, this is going to be 20% overall. It's going to be 10% on the up, and on the downside, the same thing for all of the other custom ranges that they show here. But you can, like I showed before, you can set things up manually. Just be aware that if you're making things count with a tighter range, you will definitely need to be on top of things more often, once a day at the very least, a couple times a day depending on how tight your range is. But if otherwise you go with overall 20% range on such a pool, you probably can check it every other day and see if you're still in range or not. Then once you have your liquidity deployed, you can start claiming fees at any point in time. You'll need to come here to the portfolio tab and you can claim how often you want. And Solana is a very low cost gas fee, so you don't have to worry about gas fees taking your profits as you would, for example, if you would be deploying liquidity on Ethereum. Now you can also go and create your own liquidity pool. I don't think it's needed, especially if you're a beginner. Go with these bigger liquidity pools. They have tons of liquidity, 6 million, 7 million, 10 million. You'll have more competition there, but the fact that these pools have such deep liquidity also will allow them to generate more fees, because the deeper they are, the more trading volume they can handle. Essentially, this is how you operate with ORCA. It's one of the most solid dexes on Solana. Deep liquidity, heavy volume. It's a no-brainer. If you want to earn passive income on Solana, you can definitely use ORCA pools. There's more features we can turn on and off here on the display. For example, we can switch up the estimated yield and set it for a whole year. Of course, these are all projections based on past performance, but you can get an idea of the potential of providing liquidity into these pools. Solana USDC almost 100%, even if this doesn't come to be, but would you shy away from 100% returns over a year on this asset that you're not all that much worried about in the long term? I mean, we're talking about Solana, a blue chip, then also Bitcoin and Solana, 82%. This isn't even accounting for potential price appreciation of Bitcoin, and is essentially a way that you can stack Bitcoin, stack sats for the overall course of one whole year. Even with stablecoin assets, we can see here 72%. This is the current projection, which is light years away of what traditional finance can offer you. We can keep going down the list, see what else is there. Maybe you want to find something with rewards. We can come here into the settings and just... Actually, it's not on the settings, it's here under filters. You'll have to turn on rewards, and this will show you all the liquidity pools which are being incentivized. So let's order this by rewards. We can get an idea of liquidity pools which are getting the most incentives. And essentially this is how you can use ORCA. You can see that ORCA is very user friendly, very simple interface. So go at it, search for the best liquidity pools for you. If you have any questions, hit me up in the comments, I'll get back to you. If you want to know more about yield farming, earning passive income on it, go check out the Underdog investor group. I am affiliated with them, but using my link, it will get you 20% off on your first month. You'll get access to a community of people interested in yield farming, free courses, one-on-one coaching, and they are a reliable team run by knowledgeable individuals in DeFi, so go check it out. Overall, I don't think this is rocket science, guys. I think anyone that has some time and willing to learn can definitely generate passive income in DeFi. Most of the knowledge that you need is available for free. I have a ton of content on my channel, you can check it out. Drop some questions in the comments. If you've been using ORCA for liquidity providing, you can also share your experience here. Definitely one of the top dexes people should use on Solana to get passive income. I'm going to wrap this one up, guys. Keep exploring crypto. Take care. I'll see you on the next one.